Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Gds Holdings Limited latest report. Gds Holdings Limited provides a range of businesses and services to its clients. At the core of its offerings are data center development and operation services. The company offers co-location services that include critical facilities space, customer available power, racks, and cooling. This allows clients to store their servers and other equipment in a secure and reliable environment. In addition to co-location services, Gds Holdings also provides managed hosting services. These services encompass various aspects of IT management, including business continuity and disaster recovery, network management, data storage, system security, operating system, database, and server middleware services. This enables clients to outsource their IT infrastructure needs and focus on their core business. The company's portfolio also includes managed cloud services, which allow clients to leverage the benefits of cloud computing without having to manage the underlying infrastructure themselves. Furthermore, Gds Holdings offers consulting services to help clients navigate the complex world of data center operations and cloud computing. Gds Holdings serves a diverse range of clients, including cloud service providers, large internet companies, financial institutions, telecommunications carriers, IT service providers, domestic private sector companies, and multinational corporations. With its extensive experience in developing and operating data centers, Gds Holdings is well-positioned to meet the growing demand for data center services in China. Overall, Gds Holdings Limited provides a comprehensive suite of businesses and services that cater to the diverse needs of its clients. Its expertise in data center development and operation, combined with its managed hosting and cloud services, make it an attractive partner for companies looking to outsource their IT infrastructure needs. Gds Holdings Limited market capitalization of $74 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Gds Holdings Limited holds a significant advantage in their industry. Gds Holdings Limited trades at a higher price-to-earnings ratio of 67 times and a lower price-to-book ratio of 0.31 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 68% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets in equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline are multifaceted and influenced by various market trends and business strategies. On the growth side, the expansion of data centers, increased area utilized, and higher gross new bookings have contributed significantly to revenue growth. The adoption of cloud computing and cloud service providers in major markets has also played a crucial role in driving revenue upwards. In addition, the company's strategic investments, such as its equity method investees, have yielded positive results, further boosting revenue. On the other hand, the decline in revenue can be attributed to a combination of factors, including decreased professional fees, cost savings at the corporate level, and lower sales prices for data centers. The fixed remaining lease term for data centers has also had an impact on revenue. Overall, the company's revenue growth is driven by its ability to expand its data center capacity, increase area utilized, and capitalize on emerging market trends. Conversely, the decline in revenue is a result of various factors, including cost savings and lower sales prices, which have offset some of the growth drivers. The financial performance of the company has shown significant improvements in both net income and profit margins over the past year. In Q4 2025 compared to Q4 2024, net income increased by a staggering 554.8% year-over-year, YOY, indicating a substantial growth in revenue and profitability. This trend continued throughout the year, with the company's net income for the year ended December 31, 2025 increasing by $3,998,961 compared to the previous year. The increase in net income was also reflected in the company's profit margins, which rose by 14.9 percentage points YOY in Q4 2025. The year-over-year growth in profit margins was even more pronounced, with a significant increase of 53.01% for the year ended December 31, 2025. This indicates that the company has been able to maintain its pricing power and improve its operational efficiency, leading to higher profitability. The improvement in profit margins is also evident when comparing the 2 years, with a notable increase of 46.7% in RMB profit margin. Overall, these results suggest that the company's financial performance has improved significantly over the past year, driven by strong revenue growth and increased profitability. The company's debt level and interest expenses have undergone significant changes in recent years. The company's debt level has increased, with total long-term debt reaching RMB 42,561.6 million at the end of 2025. This is a notable increase from previous years, indicating that the company has taken on more debt to finance its operations. Furthermore, long-term borrowings have also increased, rising from RMB 21,905,985 to RMB 23,363,213. In terms of interest expenses, there are mixed signals. On one hand, interest expenses have increased by a significant amount, rising from RMB 223,254 to RMB 1,561,235. This suggests that the company is paying more in interest on its debt. However, net interest expenses have decreased year-over-year, indicating some cost savings in this area. Nevertheless, interest expense as a percentage of net revenue has increased, rising from 15.8% to 20.7%. This indicates that the company's interest payments are becoming a larger burden relative to its revenue. Management's outlook for the company is optimistic, citing expected growth in the market for high-performance data centers. They plan to build relationships with new and existing customers to drive this growth. However, they are also aware of various risks and challenges that could impact their performance, including competition, security breaches, and economic fluctuations. Despite these concerns, management remains focused on a positive outlook with a focus on growth. This is driven by significant investments and acquisitions, which are expected to propel the company forward in the coming period. Overall, management's strategy appears to be centered around capitalizing on emerging trends and opportunities while mitigating potential risks. That concludes the financial summary for Gds Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.